Okay, welcome everybody to another Learn It Live webinar conducted by FX Evolution. And today we're going to be taking a look at how to day trade commodities, specifically taking a look at gold, oil, silver, and copper. My name's Thomas Atkinson, and as always, I'm joined by Ty and Abella. How have you been, Ty, and how are the commodities treating you?
Good. Yeah, no, look, it's certainly been an interesting time in commodities, and probably, touching on gold and oil is probably quite timely given the movements that we've had over the last few weeks. So I think we'll be able to look at some really good examples in the real market to actually highlight how technically sound they are, which is probably the key ingredient to what we're going to talk about tonight. So looking forward to it.
So just before we get started, Ty, I just wanted to point out to everybody that we do have a Pepperstone Telegram group. I've posted that in the chat, and also an FX Evolution public Telegram group. So you're welcome to join both. We really encourage everyone to get on Telegram. It's a great thing for our community. And of course, we post some really helpful information there every day, such as 5 kind of trading tips, all of the other webinars that we do, all the YouTube content, and of course, all of Chris's work as well. So that's excellent. All right, so just before we get started, let's go through a risk warning. Ty, the information provided in these videos and webinars has been produced by a third party and does not reflect the opinion of Pepperstone. The information contained in this video is generic in nature and for educational purposes only. The information does not take into account your personal objectives, financial situation, or needs, and it's important to obviously seek independent financial advice if necessary before placing any positions. So Ty, what are we going to be covering today? So we're going to be taking a look at how to recognize technical setups and what to watch out for. We're going to be taking a look at what economic news may heavily impact commodities. Very important thing, especially with what we're seeing with this coronavirus outbreak. Many of you traders out there will have noticed the moves on gold, the moves on oil, and I'm sure everyone can kind of correlate how that's working with the coronavirus, but very important to understand this news. Specific patterns and price action setups to keep an eye on. So we'll be going through some of the ones that we often see in commodities and that we find are quite successful kind of trades. And we'll talk about the top-down approach. We often do this for day trading. We do this for long-term trading and even scalping, because when you have that trader bias and you know a direction because a pattern is playing out on a higher time frame, you have a lot more power and, more importantly, the confidence to hold your trade. And many traders out there will unfortunately cut their trades short because they go, oh, near enough is good enough. It's actually a bit of a failure. You really want to try to say, okay, I'm going to predict it's going to go to this area, take 80% of your prediction and have that as a trading rule. So just always remember that. And of course, then live Q&A. So if you have questions, please feel free to ask them. We'll answer some of those throughout the webinar, and then we'll answer the rest as much as we can at the end. So please do ask questions. It's really important for the community to learn and to go through some of these questions we're not thinking about.
Definitely the best way to learn. So feel free.
Okay, so which trading pairs are best to start with? So of course, tonight we're going to be talking about gold, oil, silver, and copper. Specifically with gold, I actually quite like all the crosses. So many people traditionally will just look at gold versus US dollar, but sometimes it actually pays to trade potentially gold versus the euro or gold versus the Australian dollar, and you'll actually have a better trade. Now, one of the keys is going to be doing cross analysis, and we'll talk about this a little bit tonight with gold versus Australian dollar, Ty, and even euro recently, and why sometimes when you're seeing something on gold US, maybe you should check those cross pairs. Oil, of course, the 2 types of oil, sometimes one predicts the other. If you're seeing a similar pattern on each and one does break, that often can kind of show you the direction of the other oil. Silver, bit of a tougher pair to trade, I think arguably, and one that we look at and we like, but we probably do prefer gold. And then copper, one that is not often traded or not as much traded, but can tell us a little bit about economic health, and we'll talk about that, and also does sometimes present some great opportunities. So definitely is traded, but obviously gold and oil are the most heavily traded of these 4. Ty, what are your thoughts?
Yeah, gold in particular has really resurged as a trading instrument. For a while there, it was a little bit quiet, but most recently, a lot of the stats are saying that gold is actually really starting to challenge some of the currency pairs for volume. So it's a really heavily traded commodity. And of course, when there is big volumes going through, it just makes a lot of the setups actually sometimes cleaner, because people are generally looking at it as a bit of a safe haven stock traditionally, but now it's actually becoming a day trading, almost a commodity, to use the term probably out of school. It is actually a really good day trading instrument now. You can basically, set up trades that can work out, depending on what time of the day it is, in a matter of hours, just like they do in currency. So it's certainly one that's getting a lot of attention, especially recently. Oil, a little bit the same, maybe not to the same extent as gold, but it is starting to get a lot more volume through, and people are starting to see it as a really good trading instrument as well. And we're going to highlight probably a couple of the setups that we've been looking at, most recently, to really probably highlight just how it actually will come together from a technical analysis standpoint.
So what times to trade commodities? One important thing for everybody to know if you're a day trader, that gold, platinum, oil, they all have open and close times. So this is important information. You can get it from the Pepperstone website as well by just searching in Google Pepperstone commodities trading, or go to the Pepperstone website and view it there. And basically it has all of the different times that it opens and closes. So gold will be closed specifically at certain times, and so will oil. And this is important because if you're day trading and you're going into particularly a time that might close, then when it opens and reopens back up, the price may differ. And that is important, especially if you have very tight stop losses. It could gap on you, and you do need to be aware of that. Of course, these are the times here, and feel free to check those on the website to get always an updated time if you're watching this video later. How to become an expert quickly, Ty? Look, we use this slide quite a lot, but I just want to drive it home. Look, Warren Buffett obviously is one of the most well-known investors. He did not become an expert overnight. He put a lot of time in. A lot of traders, it's a misconception that you can definitely come in and start pressing a couple of buttons and trading longs and shorts and buying, selling, and doing whatever you need to do on the markets, and you might have some success, but generally to become an expert does take time. So I think it's better to be great at trading a few pairs than to be good at trading every single market. So if you choose to trade, let's say commodities, you might want to start off focusing on gold, focusing on oil, and then focusing on those two, and then you move up as you master those trades on those particular commodities. Same with currency pairs. If you're trading euro, US dollar, and different US dollar pairs, stick with those and then move into the more exotics later on. It's just a top tip. We see it time and time again, Ty. What are your thoughts on that one? I mean, it just happens, doesn't it?
It does, and I think it's actually a really good touch point that when you become really, at one with the commodity that you're trading, just like you do in currency pairs, you actually have a feel for what you expect the moves to be every day. And what I mean by that is, gold, say for instance, might hover around a $10 or $15 band in a daily move, just like the euro might be, a 60 or 70 pip move a day. That's a rough movement, and if you're going to trade it on a daily basis, you're not going to be looking for 150 or 160 pips on the euro every day and expect to actually get it. Just like gold, if you're day trading gold, what the ranges are traditionally, and you're going to be able to work within those bounds. Now, when they start to move and they start to trend heavily, you can pick that up really quickly without it being a surprise. Like, I mean, if you're used to gold being in a band of say $15 or $20, and all of a sudden you wake up one morning and it's $100 higher, I mean, obviously, something has happened and you're identified that move straight away. You don't have to actually go back and continue to check it. The problem with doing too many pairs and doing too many trading instruments is that you don't have that knowledge of what it should be doing every day. So when it does do something different, you may not be aware of it straight away. And sometimes that's the difference between getting a good trade in or a bad trade. So it's really important to be intimate with the pairs that you're covering and the commodities that you're covering, so you can identify when something is a little bit different to the norm.
So Ty, the top-down approach, we talk about this all the time. We will use this in tonight when we get into the charts, so we'll talk about it, but these are the slides for it. Basically, we want to start with a higher time frame and then break the trade down into the smaller time frames and get a bit of a bias. Now, to get a bias, it's important that we can understand and recognize trends. We obviously recommend that you read trends by price action rather than using moving averages and other kind of techniques. That's just because price action is a lead indicator. It is literally the price, and it will be the one that generally tells you what's going on first, whereas a moving average is a lagging indicator. So it can take a little while for a moving average to agree with the same thing that price is. So learning your peaks, your troughs, your higher highs, your higher lows, or lower lows and lower highs in a short position, very, very important. And we do suggest that you get a very good kind of grip on that. In terms of chart patterns that we want to use in commodities, we've used these slides before. We've got the double bottom, the ascending and descending triangle, the inverse and head and shoulders, and then the flag patterns. Specifically, I really love the head and shoulders and the double bottoms in these particular pairs, but even ascending triangles, they've worked incredibly well in gold, haven't they, Ty?
They have, yeah. And look, like I said, the more it becomes the norm that people are trading, heavy volumes, the more and more these patterns are going to work out. They basically become a self-fulfilling prophecy, and the more people that see them, obviously, the better chance they are of actually working out. So it's actually really good to see, but they're definitely the top 4 patterns.
So again, before we get into those charts, links with gold / silver and oil trading and volatility. So Ty, we've seen this coronavirus start spreading through, the Western world. We've got also South Korea, Italy now, it's in Europe, and it's definitely spreading at a higher rate. That's causing the S&P 500 to obviously start crashing, or at least, fall from its highs, increasing what's called the VIX. We've done a webinar on that, the volatility indicator. And when usually the VIX rises, we generally do see gold at least either preempt this move or move up, and usually oil sometimes slumps. So that is what we're seeing right now. We are seeing definitely a slump in oil, and we've seen a massive move in gold to the upside. So usually safe havens and hedges to, I guess, economic turmoil, gold and silver, they traditionally go up during times of high volatility. And of course, oil, generally speaking nowadays, does go down. And that is what we've seen. And we'll look at the charts right now and see what's happening. Okay, Ty, so we'll start with we'll actually start with the VIX quickly. So we can see here that the VIX is starting to spike again. So the VIX is above 22, and that's pretty important. Whenever we see this volatility indicator move up, usually it hovers kind of in this range down here, a bit low, kind of 16, and in that 16 all the way down to like 12 range. When we see it there, usually it's just standard kind of technical action. When we see a spike like this and price goes all the way up to the 20 and above the 20, usually that means that we're going to see incredibly large moves, and we want to be basically a day trader at this point. When we're seeing high volatility, market moves are sharp. They can be V-shaped reversals very quickly as well, where the market will crash down and then very quickly reverse that. And by being a day trader or somebody that's not going to be in a position for a long time, we can take advantage of the short side or those aggressive moves. So it's important to check your VIX and know where it's at. If it's above 20, generally speaking, you're going to want to switch your method to more of the day trading kind of style in your kind of trading arsenal. Okay, Ty, so here we've got our XTI and we've got our XBR, okay, so our Brent and our normal crude. So basically, or West Texas crude. So with this, we can see some pretty interesting levels. Did you want to mention something about crude, Ty?
No, it's just that we've actually got a question in the room, and I said we'll touch on it, just the differences between the two oils. So maybe we just might want to mention the differences between the crude and the Brent.
Yeah, I'd probably suggest the best thing to do is just search literally Brent and XTI in literally Google, and you can pull up a whole bunch of information about the different contracts, the boards they go through, the exchanges, all those types of things. I'd actually probably suggest that, just because I know we will be on a timer. So search XTI versus XBR in Google. It'll come up with some very easy information, and you can check those contracts out. That would be my suggestion on that one, Ty.
It is more a contracts thing, yeah. But I think look, both of them move very, very similarly, of course.
They do.
Yeah,
It's got to do with refinement, other things. Yeah.
Yeah.
Okay, so when we talk about XTI, it's one of the ones I usually like to look at first. And we can see here, we've got this nice little shooting star tiring coming off potential roll reversal over here and previous resistance. Now, if we're a trader and we want to be in, let's say, the day trade kind of thing, we can see that, of course, we've got that movement down in XTI. We've got this shooting star candle. We've got it at previous resistance. And at this point, we're just at the daily. So we're just doing a top down. Once we notice something like that, then we can start to break down the time frames and we can start thinking about, well, what else do we want to do? It's a bit of consolidation around here. Maybe we can go down into the 1 hour, see what market's doing, go into even the 15-minute and see what the market's doing. And as a day trader, we're not really going to be locked in necessarily to any one time frame. Usually the 15-minute, 1 hour, 4 hour is going to be where we want to be. But as a general rule, really support resistance works incredibly well on any of these pairs, specifically the oil and the gold pairs. Got this really nice level of support tie. We've got that 1 touch, 2 touches, 3 touches, 4 touches, and it breaks through. And this can pretty much give us an opportunity on the 15-minute where we've seen that shooting star on the daily. When we see that shooting star on the daily, it triggers us to then want to start day trading potentially towards the short. And then we can take the short when it breaks through, or we can take the roll reversal here with the engulf, short it off, get another roll reversal here, and you can short it off again. And then of course we see that volatility that came into it. And that just kind of is getting lucky really that the volatility ends up agreeing with this trade. But that's the gap coming in on Monday after the weekend. And I think this was quite an easy trade to see, specifically because we're using the daily to find a period of an area of resistance. And then we're using that kind of 1, 2, 3, 4 break of support. And that gives us the opportunity to either take the initial short or take the bigger roll reversal short. And the beauty of doing that bigger analysis tie is we know that if this market is going to come off a level like this, there's a high chance that it goes either down into this point here, that kind of 51.37, or it comes all the way down to the lows of kind of 49.57. And when we see that volatility spike happen and we're in the short, we can actually even hold the trade longer. So a good way to kind of hold the trade longer, guys, would be to use the moving averages. In this case, it's a 20 moving average, which is the red one, EMA, a 50 moving average, which is the blue one, EMA, and a 200 moving average, which is an SMA. And we can literally just follow price on a 15-minute with the 200 being our market adaptive stop and just hold it all the way in. So when you see that volatility spike above 20 on the VIX and you're already in a short and it's a scalp and you know there should be more distance in it on the daily, we can actually hold the position longer than normal. And that's an advantage that sometimes may happen for you.
And I think that probably what we've just seen here on the 15-minute is actually how it probably really highlights how technically sound, trading oil actually is. Like on a 15-minute chart, you're seeing an absolutely beautiful, series of higher highs and higher lows, and lower highs and lower lows, like to actually confirm the trends. The roll reversals just work out spectacularly, especially at those key price points. And they really give you that opportunity to basically get in, even if you miss some of the key zones. You've got plenty of opportunities to actually get in on the little mini pullbacks that it does all the way down. It's a very clean looking chart, really, when you think about it, compared to what it was probably about 5 years ago. So it's, given that, like if you looked at that, and this is the wonderful thing about trading, of course. I mean, you can take away the XTI USD at the top, and you wouldn't know whether you were looking at a Euro USD chart or an oil chart. And I think that's what actually makes it such a good day trading opportunity, that the charts are very clean and very consistent. They're not hugely volatile like some of the exotics can be.
Yeah, so there's just so much opportunity this week on XTI, especially once you recognized that we're in a higher point of volatility and you just started trading those roll reversals. Trading roll reversals is one thing that we talk about all the time, where support becomes resistance or resistance becomes support. If you're not aware of it, watch our previous webinars or even just search it on Google. The basics are there. There are nuances to those things, but the basics are definitely there. Yeah, so realistically, roll reversal off XTI made a lot of sense this week. Let's take a look at Brent now, Ty. Very similar setup, previous resistance, market's come up, market has sold off a little bit here, and then we can break it down. Now, the reason I do prefer XTI is probably becoming pretty apparent. This is a super aggressive kind of trend, and we do have a similar setup where we've got that nice break on a 15-minute below the support line. So if we go to the 15-minute, again, to pull that across, we've got that kind of 1, 2, 1, 2, well, in this case, it broke through a little bit, 3, 4, and then at this point, pretty much we're looking to the short side. Doesn't have that as nice kind of role reversal. And then as it does come down, Ty, it just doesn't look as clear technically with, I mean, this is a great entrance here. This short here is very good. This short here is not bad, but the first initial bit is more difficult to get into, I would argue. So there is really nice trades afterwards, and they're very similar to what you're seeing on the XTI with this point here and this point here. So you can see very, very close, different price, slightly different swap per day. So it might be worth you taking a look at the difference in swap costs as well. But XTI has been the better, probably more consistent technical trade.
Yeah, correct. Like the thing is, it's actually interesting that XTI has actually broken down further than the previous support as well. So you can actually see when you do compare it, the other one, when we go to, you can see here we've definitely broken that support, and then when you switch it over, it's actually right on it. So you can actually see that it's not as, it hasn't actually reacted as sharply to a new low as the XTI has. So in that sense, it's a little bit more volatile, but I think probably the messiness of the chart, like you highlighted, is probably why XTI seems to be the better of the two to actually be trading technically. I think you get your opportunities a little bit cleaner on that one at the moment.
Yeah, I think sometimes they'll switch and change. Sometimes you'll have a better opportunity on the other one. If we go to a weekly, just because I know it's there, there's a beautiful one that we talk about all the time, which is this inverse head and shoulders. And this is a very nice trade, left shoulder, right shoulder, and then of course towards the long. And if we go to, let's quickly get rid of all these lines we've got here. And then if we go over to XTI weekly, I mean, very, very similar kind of pattern, Tyrone. That left shoulder, the head, the right shoulder, and then takes, like, it basically breaks your first initial neckline here and then kind of stuffs around and gets through. So very, very similar patterns. The distance fully completes where it goes back up there. And when you start to see these longer time frame patterns work out, e.g. like the double top up here, which breaks through and goes down, you can start to get confidence this is a very technical market. I always say that to people that trade a lot of cryptocurrency. If you look at things like Bitcoin nowadays and Ethereum, they actually do have some great technical patterns on them, but it wasn't always the way. Now there's more volume in those particular and the particular currencies, and of course they've become more viable and more traded with that volume. They do become more technical and become self-fulfilling prophecies. So very important.
So just quickly, Tom, so I'm getting a few questions about looking at the current markets. Yeah, this webinar is predominantly for the commodities that we're talking about tonight, but we are doing a live and market analysis webinar at 9 p.m. So anyone who would like to join that, I'll pop the link in the window there in the chat, so you can just jump on that link if you like. That's where we're going to look at the live market analysis and apply technical analysis to the full market. So feel free to click on that link and join us for that one. But this one is purely on commodities and how to actually day trade it.
Okay, actually, before we go into the slides, we'll talk about gold. So here we've got XAU USD, so the one that most people trade. I just want to reiterate a few things. We mentioned this, and I think we wrote an article about this on the Pepperstone website. Basically, we've got this giant flag happening on the weekly. Now, of course, if we're a day trader, the importance of this flag is really that it has a prediction of where the market should go. If we then zoom out on a weekly, what we'll notice is that that prediction of the flag is back into the highs at around that 1780 area, Ty. When we see that, it gives us that bias that we would probably be looking more towards the long than the short. If we had, like, let's say, an opportunity to get in the long, we'd feel a little bit more confident in it. That's really, really important. And then when you couple that up with the initial break, which was that really nice ascending triangle, Ty, we can see that gold has had some beautiful technical breaks. And when you see those beautiful technical breaks, whoops, sorry, I need 2/3 here of this ascending. There it is. And you can see it pretty much hit that, and that's where that first main resistance, and it kind of hit the role reversal point, which was the first major resistance before it hit that second one. So these kind of patterns are all showing us what we should be looking for. When you see the break, you can then start day trading in that direction. You see that breakout, you see the close, you have a bias towards the long, you day trade in that direction. You see the breakout, you day trade in that direction. You see the breakout, you consider day trading in that direction. That's the kind of thing that we're looking for when we're doing that top-down analysis. Now, if we're looking at the break that happened just recently, again, the market was kind of making a series of higher highs and higher lows coming into it. 1600 is a very key level, but I think it was actually this 1593 that I want to see broken with a close. So when we saw this candle, and again, here we're on a 4-hour, when we saw this candle here, to me, this signals so much about gold having a serious breakout. And because this was only a wick and a very short-lived one, and it hadn't tested those before, this is the candle that we were looking at as, okay, it's our go signal. And then, of course, we couldn't predict how aggressive it was going to be. But when that VIX spiked, it got above 20, boy, oh boy, it definitely meant that we were going to see a lot of action. And it's no coincidence that it gets very close to that 1700 and just starts selling off. So what are your thoughts on this one, Ty? Beautiful break.
Yeah, it is a beautiful break. And look, yeah, the funny thing was, like we were talking about this at the webinar last week, where gold seems to have actually preempted what the market was going to do, because it was very unusual for gold to be breaking to these new highs while the S&P 500 hadn't done actually anything. And that was very, very unusual.
True.
And yeah, 4 days later, the S&P 500 is down 10%. Or maybe not 10, but it's probably down about 8. I think it's dropped about 3% for 3 days in a row. So it actually, it doesn't normally preempt it. And that was, we did highlight that last week actually. And the sell-off in the indices has been extreme. So it was quite unusual for gold to do that. But I think that's probably what makes that break so significant. I think the fear was probably creeping into the market well before the VIX even moved, and the safe haven became the safe haven prior to the money coming out of the market, which is actually quite interesting.
Now, I had a lot of people ask us, Ty, how do we even trade it? They were seeing it, let's say here, okay? Let's say they were seeing it here, but you know, ideally you would have been in off the close, and you see the close, and then you can make a decision whether you want to take it off the close and be the aggressive entry, or take maybe the role reversal pull up. That's another one that usually does happen. Or of course, you can wait for little pullbacks like this, little hammers coming off. The pullback of a 20 moving average is very good. But when something goes vertical like this, you've really got to start breaking down those time frames. You've got to start going, okay, we're in a vertical time. Let's start looking for patterns inside of this trade. Now, here's one that gaps in. Again, a difficult type of trade to take because of the gap. But basically it gaps through over the weekend, got resistance almost forms, little ascending triangle here. We break it down to 5 minutes, going to look even better. And then it breaks through. We could take this, and of course it's a massive aggressive candle that comes out. But there's a lot of little ascending triangles in here, Ty. That's a 5-minute chart right there. That's going to be a nice little take. And then of course,
if you're a pattern trader, if you're a pattern trader or even a price action trader, there's probably been about 20 opportunities in the last 2 weeks that you could have gone long on gold, and even short for that matter if you're actually trading the reverse at some of those key points up top. But the long in particular has been a trading bonanza, really.
Similar thing for what we saw with gold versus Aussie. Now, the reason why this one I want to highlight is that the Australian dollar has been very weak. Of course, with the economic jobs figures that came out, the Australian dollar is weakening against the US dollar. So it just makes sense that the gold is going to be very strong versus, if it's strong versus the American dollar, imagine how strong it could be versus the Australian dollar. So we've seen some massive moves here as well. Definitely some great opportunities. And even like little things like this, we've got this little candle that happened before, Ty, a little 4-hour kind of bullish hammer. We've got nice rejection off here. We've clearly got some form of resistance up here that if we then break it down to the 1 hour, we can see that nice resistance came up, gapped above, found that as support, resistance, and then pretty much we're seeing a bit of a break here, and we've got the moving average crosses, all sorts of things. So these are what we want to do. We want to use moving averages. We want to use patterns, learn your double tops, double bottoms. We do have a really nice kind of form base here on the on gold versus Aussie. Then we might look at the Australian dollar versus the US dollar, Ty, see what's happening there, get a bit of a bias, and then we'd be looking technically at different kind of directions. So another one definitely to add to your pairs if you have not done that. I think it's worthwhile.
Yeah, it's like any of the, I mean, it's almost like, it is almost like a cross pair really, where, you know, you want to analyze. I wouldn't be suggesting by any stretch of the imagination that you trade every gold pair there is versus its opposing side. But what you want to be doing is basically looking at all of the opportunities and identifying which one is going to look the cleanest, which one's got the best move in front of it and probably the least amount of traffic in front of it, and probably go with that. So generally, that's what we do with cross pairs. So, you know, we're not going to trade every yen and basket it. What we're going to be doing is analyzing all of the yens and looking at which one looks the cleanest and the best from a technical standpoint. And gold's a little bit the same. So you basically want to identify, you know, the one that looks the best and go with it. Because look, the thing is, if gold sells off heavily around the world, or it's going to go down in nearly all of them. So you are really effectively basket trading, but it doesn't mean that one is stronger than, or one is weaker or stronger than the other all the time. So you want to analyze all of them. So you want to look at the gold versus the Aussie, gold versus the USD, gold versus the euro, work out which ones are looking the best. Then you can do your cross analysis and work out, is the euro stronger than the Aussie, or is the is the USD stronger than both of them? And then make your assessment and trade the one that looks the best, but not all of them.
Yeah, very good point, Ty. Here we've got euro versus US dollar. Just quickly, we can see very weak, then suddenly starts to get stronger. No coincidence. Gold versus the euro is not doing as well. It was doing great. It was the best. It was the best. But then now it's no longer probably the best pair, at least with what price action we're seeing currently. So it pays to do that reanalysis all the time. Now,
we're getting quite a few questions. Sorry, we're going to get quite a few questions about the VIX. A lot of people want to know about it. We did a webinar on it for Pepperstone 2 weeks ago. So if you want to jump in and jump over to the YouTube channel for Pepperstone, and you'll see that the VIX webinar is there. There's a whole webinar just on it. So it's a really good thing to check out. And if you did miss that webinar, definitely jump onto the channel and check that one out, because it's a full explanation of how the VIX works and how you can use it in your everyday trading.
We've got silver here, Ty, silver versus euro. Basically, I find it a little bit more choppy when we're looking at the silvers. Very similar charts. If we go to the weekly, you'll see very similar to the euro one. Basically, again, you want to do that cross analysis, and you want to see very good patterns. I mean, some that stick out to me, I guess they've already happened, but definitely was a really nice formation. This double bottom down here was a really nice formation. And actually, if I was in this type of trade, Ty, I would have been getting out at around this level. Not these highs up here. I wouldn't have probably held it that long, but this level in here made a lot of sense, and that would have been the distance of that double bottom. So that's a great opportunity. The break of this support as well. So when we saw this support here being broken just here, that would have been a really good short into the previous lows. So there is great day trading opportunities, because again, we're doing that top-down analysis. What I like to do with something like silver is I like to find key areas, and when it breaks those key areas, then I dial down into the smaller time frames, the 1 hour, the 15-minute, the 4 hour, and I start to look for my opportunities in that bias direction. And that's where the day trading comes in. So it sounds crazy, I know, to be on a weekly, but you do it to get the bias to see where the big money flow is. It's just so important, guys. Where the big money flow is and where those orders are going in. People think that people from Goldman Sachs just basically click a button and put, $1 billion into the market. They don't quite do that. They scale into their orders over time, and that scaling in of the orders is kind of happens when levels are broken in the correct directions, etc. So very important to think. That's why there's such aggressive moves sometimes when key areas are broken, and then when the new low is formed in, let's say, a sell. Every time that new low is formed, it can be a very aggressive candle because it's triggering all those orders that are pending below that point. So think of it that way. and it will help your day trading. It's something that took us a while to do, because we used to just stick to 15 minutes and that was it, or maybe go to the 1 hour and that was it. But it's something that's very important to do. So definitely silver versus US dollar, silver versus euro, worthwhile looking at. Okay, so I've got a little write-up here about copper and why it's often considered an indicator of the economy's health. Now, this may not be as true as it once was, but basically copper is a base, oh, it said mental here, but metal that has a versatile application across heavy industry, transport, communication, and utilities. So you need to think of it in a lot of infrastructure projects, basically. In the last 30 years, the growth rate of copper globally was negative only, I think, in 5 years, and that in 4 of those 5 years, we had an economic slowdown. So we had basically negative growth, and they were years of high volatility and poor market performance. So it's very interesting to see that correlation there. A slowdown in copper consumption can show a global slowdown and growth and weakening economy. And I think it's also important to understand, you might be trading it just technically, but if you know the basics of what maybe that particular pair is and what it does, then it helps you get a bit of expertise in it. You understand, okay, this is happening for this reason. The VIX is potentially spiking, so maybe copper is not doing so well because maybe there's a concern about global growth. Maybe there hasn't been as much demand for copper recently. We start to do this cross analysis. It's worthwhile doing. All right, so we'll take a look at copper now. Lo and behold, copper's selling off. Have a look at our VIX. Our VIX is increasing, so that makes sense. But that's probably a direct reflection of what is expected to be demand in the future. So we've got concerns over growth, bit of consolidation, and then of course now we've got breakout to the low. With copper, it's not one that I trade a huge amount of. I don't think Tyrone probably does either. But there sometimes is some really good trades on it, like roll reversal points, e.g. here, very nice support, becomes resistance as it breaks through. Makes sense to be looking for sells at this level. If we see copper break out below 250 and we go to like a weekly, you can see how important that 250 is in terms of copper. Now, what happens if it breaks 250? It pretty much exposes this 230 kind of area. So that means that we could get a bias that potentially, if it broke through here, maybe we have a bias that it comes down to this level. Therefore, we can day trade the swings and the roll reversals all the way down to this level. That's something that we can think about, and we can start formulating our ideas. Similar to what happened here. Support was broken, went down to the level, came up, roll reversed, went down to the level. Gives us that bias to be able to trade the smaller timeframes. What are your thoughts on copper, Ty?
Yeah, I think it's probably one of those ones where the price points are really, really important to understand. It's probably one of those ones where if you are going to concentrate on copper, you need to do a little bit of history on it and basically work out where those key price points are, because it stands to reason that there's going to be fair value for every commodity, right? So, you know, you can see here how often it gravitates, like the 250, you can see it's pulled up to like a brick wall there several times over. The $2 is obviously a very serious level. The 230 is a very serious level. So it's going to gravitate to these really important numbers. And you can see even the $3 ones. So you can see basically you're working in 50-cent increments. If you go to the $3, you're going to find,
very definitely.
Yeah. And then at 330 again, that's where the previous resistance was. So yeah, between 330, $3, you know, 250, 230, and $2, you've got 5 or 6 very key levels there that prices are gravitated towards. Now, when you understand those price points, you can basically go to the smaller time frames and identify where the smaller term trends are going, and you've got a very clear take profit level, because at the end of the day, that's where they're going to be heading to, because they do gravitate to that fair value at the time of what the economy is looking like. So very important to understand the key levels and trade towards them on the smaller time frames. But you've got to, again, identify them on the weekly to really understand where they are and why they're important. And then when you go back to the smaller time frames, the lines will be there, because you will not see these lines on a 15-minute or a 4-hour chart.
Yeah, the importance is draw those lines in the bigger time frames. What market conditions do we want to look out for, Ty, with commodities? So non-farm payrolls and key economic news, definitely important. Often summits, political risk, definitely one for oil in particular. If we see, let's say, some kind of summit and, of course, everyone in, just skip my mind, what's the oil summit called, Ty? The one that always spikes
OPEC.
it? OPEC, that's the one. So OPEC, yeah, you want to watch out for OPEC meetings for oil because that can spike it and you can get some nasty gaps off. And they always have it on the weekend. They like having weekend meetings. So yeah, be careful and look at your economic calendars before considering trading many commodities. Very important. Mondays often can be kind of like a bit of a fake out day. It does happen a lot with gold as well. I would say that Asian trading session is definitely picking up for gold. It's becoming a lot more of a 24-hour trade, which is kind of nice. So 24/5. It used to be just really picks up in London, trades through to the US, but the Asian session can be quite spiky and quite high volatility there with some good opportunities in the technicals. Type of market conditions, of course, important to understand your range bound, learn about channels to figure out range bound strategies. It's very important pattern to understand, and then trends, your higher highs, higher lows, peaks and troughs, etc. And of course, the time of year. Certain particular times of years, certain things will happen, and technically, it kind of like activates a switch, and you'll see certain commodities trade a lot more. You can actually pick up some interesting charts. I should have bought one tonight that where you can get gold, and you can actually see the months of the year that it tends to have a positive correlation with and a negative correlation with. You can get like 20 or 30 year charts for that. And you can see that the same kind of thing happens time and time again to at least some form of statistical likelihood. And that helps your confidence. It's not so much you're going to trade off that, but imagine if you're seeing a great buy opportunity, you're sitting in February, and February just turns out to be a month that's incredibly likely to be a bullish month for gold. And you see that it has a range of usually 5%, and that's kind of similar to what your technical analysis is showing you. Well, hey, it gives you that confidence to stay in the trade to the entirety, like we mentioned before. So I really like that kind of analysis, and I think you can bring it all together to get as many reasons as possible to be in the trade. Brings us over to Presic, Ty. What's Presic? Would you like to explain it to everybody?
Yep, so Presic is a trading system that we apply to all of the trades, whether we're trading gold, silver, the Euro USD, or BHP. It basically is a formula to identify the technical aspects of all of the trades. You're basically going through all of the important things that we talked about tonight. So price action, risk management, the ELD 363 system, which is that's specific to our course, chart patterns, indicators, and charting techniques, things like trend lines, Fibonacci retracements, that sort of thing. And what it does is it's effectively building a trading plan. And that's what you really need no matter what you're doing. You need to be putting the boot on the other foot. So if you are going long on any instrument, really, you need to be looking at all of the things that could potentially help it go long, or indeed things that could be potentially wanting to short it. So having a trade plan, especially when you're first starting out, is vitally important to trading success moving forward. We've been trading for more than 12 years now, and we still use the Presic system. So that's how important it is. Even though we know what we're looking for, we still like the Presic system to give us the ideas that we're actually on the right track and we haven't missed anything. So definitely have a trade plan.
It's essential. You effectively have a business when you're trading. You're trying to keep to the consistent business plan, and that's what like something like the Presic system is. And of course, you can find that on our website fxevolution.com, and as part of our advanced trading module. But yeah, it's some great stuff. It's a lot of time and thought being put into that course for sure. Now, in terms of sound risk management, Ty, you'll hear everyone say 1 to 2% of capital max risk. There's a reason for it. You don't want to be risking too much. It's just like if you see a great setup on gold versus Aussie, don't go just take a buy on gold versus USD and gold versus euro. Effectively, you're taking triple the risk at that point, and you need to be very good with your risk because you are trading a quick market and you're trading potentially leveraged as well. So you need to be a bit careful with your risk rewards. Make sure you always risk no more than 1 to 2% of your capital and try to stick within those boundaries. You want really trades as well that give you good risk rewards. Patterns help you do that. Recognizing patterns and using that top-down analysis will give you a greater likelihood of having the opportunity of getting a higher risk reward. So that's really good. And of course, you need to plan before, when you're in kind of like a sane mind, of your get in, get out strategy, your stop loss strategy, all of those types of things. It's really important to do. Otherwise, you might make some decisions that are a bit rash during the trade, and you may regret those later.
Yeah.
Of course. Yeah, I mean, well, everyone does, don't they, Ty? We've all been there and done that once or twice. Telegram group. Once or twice a week. No, not for me anymore. No, thank you. Maybe, yeah, when I was doing those 16-hour days back in 08 during the GFC. Telegram group, of course, feel free to join Pepperstone and FX Evolution's public Telegram groups. We put the links in there, but again, you can also search them, I believe, in Telegram. Just search Pepperstone or FX Evolution. You can bring those up. Great groups, kind of different information. FX Evolution's more about having a chat with other traders. Pepperstone's won some great tips every single day and great news. So it's actually pretty much like an economic feed in terms of it tells you the most important news of the day, Ty.
You're always going to be up to date with all of the important news coming out. So yeah, definitely one to have on your list and have alerts set for. So when anything comes out, I know Pepper are right on to all of the alerts. So if anything's happening, you will know about it first.
Okay, we've just got some questions here, Ty. I'll just quickly reel them off. Quite a few people talking about the VIX. Definitely check that out. Check out a webinar again a few weeks ago that we did. Go to Pepperstone's YouTube channel and you'll see it. How do you get the drawing tool on MT Forward? That's part of this webinar tool, but you can get.
It's a webinar tool, not an MT4 tool, unfortunately.
Yeah, you can. I think if you're using Windows, you can just use Snippet and then just snip the image of it and then draw all over it. That might be a good technique for you and a free one. There are some great drawing programs out there. I know Snagit's not bad.
Can you just pop up the Pressix slide again? Someone just wants to see the Pressix slide again so they can jot down the important stresses. There you go.
No problems. That's fine.
Yeah, and also, yeah, anyone who wants to join us in our webinar, which is starting in about 12 minutes, yeah, the link is in the chat there, so you can just pop your, just click on the link there and you can just register for that, and that's the live analysis one. So a bit of what we've talked about tonight will be in there as well, especially with gold playing the game, so we'll be doing quite a bit of technical analysis in there, so feel free to jump in on that one.
Okay, I'll answer one more question before we finish. Is there a best time to trade? Oh, two questions, then we'll answer. Is there best time to trade gold? I don't think there is the best time to trade gold. I used to say just London, but really, I'm telling you, Asia is not bad. Asia Open is not bad.
Yeah, gold's moved. Gold's the mainstream trading instrument now. There's like I think I answered that question as well in the chat. You know, whenever you're trading the Euro USD, you can be trading gold just as efficiently because there's enough liquidity there and there's enough people trading it now to make it. Yeah, I haven't seen a bad time to trade gold. Only, of course, in those times when the market's basically shut down, like after New York close to Asian Opens, obviously a bit of a dead zone, but that's a dead zone for every instrument really. But any of the open world markets, the Asian session, the European session, and the New York session, gold is moving just as fluently as a lot of the other big pairs are. So have no fear about that.
I've got a question here from Michael, and I think it's just an important one just to understand these things. Hi guys, do you suspect oil will drop lower as a result of, I think, Equinor pulling out of Australia, or will this impact the odd more so? So look, it's probably not big enough to impact oil by itself. What it'll be, because it's just in, you know, it's in Australia, yes, it's news, yes, it may impact our economy, etc., but it won't impact probably the price as much. What you'll find is that oil is a direct reflection of negative attitude towards oil at the moment, and also the volatility that we're seeing. So really what I like to do is we like to trade the technicals and the price action more than probably consider too much about those types of events. Generally speaking, most of them will already pack into price so quickly through algorithms that you won't be able to trade your thought bias. It's the packing of that news over time that will push it in the direction. Okay, well, thank you very much. And we will see you in 2 weeks' time or in about 10 minutes' time, Ty. And we wish everybody the best trading experience over the next couple of weeks. hopefully everyone does get involved in some great trades, and be careful in that volatility. Try to always have a stop loss, because it is important during times such as these.
Perfect. No worries at all, guys. Thank you for joining us. I hope this has been an informative session on how to get into the commodities and how to trade them. And any questions, fire them off at your Pepperstone representatives, and I'll pass them on to us, and we'll be happy to help out. But you can check out a replay of this on the YouTube channel tomorrow. And we'll see you in 2 weeks' time.
All right, thanks very much. See you guys.
See you guys.